Hi guys, it's Numistacker and I'm back with you today to talk silver and gold prices. I'm only a mere collector. I'm not a merchant banker, I'm not a metal specialist, so everything I say is to be taken probably with a pinch of salt. But there's a lot of collectors who are now right in the middle of this potentially speculative bubble for metals, and so they're having to decide, whether they believe prices are going to go down, steady, or rise even further from their dizzy heights. So, being a person of common sense, my gut feeling is that when you see price curves which are almost vertical, then some kind of adjustment is very shortly going to happen, and that price will adjust downwards. But that doesn't necessarily follow in these current markets. Common sense seems to be something that is not really the number one kind of priority. And I'm going to look at 5 points or 5 reasons why the price of gold and silver, particularly the price of gold at the moment, is likely to be rising, certainly in the medium term and probably in the short term and the long term too. So what do I see? What do I see as a kind of an amateur in this? I see everybody, apart maybe from the UK, buying gold. I think that the big players, China, Russia, India, Turkey, have been stockpiling gold for quite some time. They are trying to disengage themselves from the power and strength of the American dollar. And in doing so, they're buying and putting pressure on the market on a continuous basis, and that is driving the price up. There's also a lot of people who say that the real gold reserves in China are potentially even higher than America, but for various political reasons they don't want to make that publicly known. But they're a big gold producer, and a chunk of that gold production has gone into the Chinese reserves, even if they're not declaring it. The second factor that really needs to be factored into this is a kind of a negative, to the extent that people are not very trusting of fiat currency as a store of value, and they therefore aren't really happy with holding a lot of fiat currencies. I mean, all the individuals that I know, the last thing they want to do is actually hold money, fiat currency. They do want to hold assets like gold. They do want real estate, property, potentially even art, anything really which is not paper money. And that certainly does have quite a big global impact on the market when it's totaled and when it happens in multiple countries at the same time. I think the third factor is almost certainly geopolitical tension, global uncertainty, the emotional side of the market, the fear factor, and all of the ongoing conflicts or potential conflicts, hotspots like Ukraine, Middle East, South China Seas, trade tensions, tariffs. All the uncertainty makes people try and put more of their assets than would otherwise be the case in something that they perceive as safe, such as gold. Probably the number 4 reason for gold to be shooting up is confidence or lack of confidence in currencies, in the ability of countries to manage their supply of money and their currencies in a good way. A lot of these countries, particularly the US dollar, record debt levels, deficits. The American government is kind of in chaos at the moment with no money to pay staff, and there's this move towards de-dollarization in global trade, and a lot of countries, as I mentioned before, have chosen to de-dollar by buying physical gold as a store of value, as the oldest and most liquid of those means of not relying on paper fiat currencies. I think the last factor that I think is pushing up the price of gold at the moment is to do with markets, the way markets work, investment demand. You know, there's a lot of paper gold which is being traded, and as soon as the gold price goes through certain resistance levels, then it can generate its own upward movement. That can also work the other way around as well, and you can get big swings downwards, and it may very well be that over the next few months we're going to see big swings downwards before a medium-term adjustment. But you know, as I say, I'm not a banker, and I'm not a trader of metals. I just look at it from the perspective of the average collector and whether they should be buying more gold coins or selling gold coins or bars at the moment, and what they should do to kind of hedge their risk. Silver seems to be at pretty much a high, although it's not really at a high at the moment in real terms. A lot of people say it's still got a way to go, but as well as all the factors that drive gold, there are a couple of extra factors that seem to be driving the price growth of silver. People who should know about these things say that the inventory of actual physical silver is extremely low, and reported shortages of the actual metal bars seem to be driving price movement. And one of the things that is interesting about silver is that it's a metal which is generally used, whereas gold is not really ever very much used. The supply of gold kind of remains the same overall, but with silver it's kind of used and not recovered in a much more meaningful way. So the production of silver often lags behind if there's a big rise in the demand for it. Who basically said that the physical market in London is kind of broken at the moment, and silver can't really be delivered very easily. So he said, as a result, traders have taken the unusually high step of flying silver across the Atlantic from New York to London in the cargo holds of planes. And they say normally only gold travels this way. Silver is bulkier and tends to travel by ship, but they're trying to kind of even out that squeeze in the market. So until they do that, I guess silver is likely to be pretty strongly priced. And a lot of people say that it could easily go from $50 up to $100. I'm not so sure, but the premiums will increase on silver coins for us mere collectors. In old advice from a coin collector, you know, should you sell gold? Should you buy gold? Should you sell silver? I think the most sensible thing to do is still to carry on buying gold, but not to buy too much of it at a time, to dollar cost average, pound cost average, buy a little bit, just keep on buying. Anyone who's had that philosophy over the last 10 years has done very, very well, and those who have invested in bullion have done a little bit better than those who've invested in numismatic coins during that time. But that's not to say that that situation will carry on indefinitely going down. And though gold didn't really act for quite a long time as a store of value, it does seem to be in this particular historical period becoming much more of a store of value because of the belief in it that a lot of the international countries are placing in the metal. If they decided to sell off their gold supply, then I guess the price of gold would then start to not be such a store of value going forward.